Renko doesn't fix bad trading. It just lets you see bad trading more clearly. Let me show you something that's taken me about 3 years to figure out, but it only takes about an hour a day to apply. This is gold from earlier this week. Look at this expansion here. The whole move you're seeing took about 20 minutes. If you'd have taken 3 pending orders at the right levels on this setup with the right stop loss, you'd have been done by about 8 o'clock in the morning. That's the whole job. 1 setup, 1 hour, done. The problem isn't finding the setups. The problem's having a rule for exactly what to do when you see them, and the discipline to do nothing the other 23 hours of the day. In this video, I'm going to walk you through the exact strategy I take every morning. I'll show you the filters that qualify a setup, where the orders go, how you manage them, and most importantly, what I do when it doesn't work, because most of them don't run perfectly. And if you stick to the end, I've also got a free pre-trade checklist I'll give you that condenses the whole strategy onto 1 page. Stay with me. Quick honesty before we start. Renko is one of the most oversold chart types on the internet. People sell it as some kind of magic, removes noise, removes time, follow the arrows, get rich. That's rubbish, all right? Renko doesn't fix bad trading. It just lets you see bad trading more clearly. What Renko does, it makes structure obvious. You can see swing highs and swing lows without squinting. You can also see when a market is in expansion versus chop. And you can count colour changes instead of trying to interpret candle bodies. It's useful, but you still need rules. So here are the rules. Filter 1. The move you're looking for has to take out at least 3 swing lows in 1 continuous push, and if it's a buy setup, it's going to be 3 swing highs. So let's look at this example here. So we've taken out a level here. Look, we've taken out another level here, and we've taken out another level down here. See, so that's 3 levels that we've taken out. Okay, but this is the easiest part of the strategy to mess up, because every red brick looks important when you're staring at the chart. So let me be specific. A swing low here, yeah, here and here. Okay, the current move takes out all 3. That qualifies. No further questions, no further interpretation. Right, let's look at this example here. We've got a swing low here, and it's taken out this and this. That's only 2. It's not taken out 3 swing lows. Our big example here has taken out 3. It's taken this one, and this one. Okay, so that is filter 1. It's the single most important filter in this entire system. Let's move on to filter 2. Now this is one you can't ignore even when you think filter 1 has passed. You've got to zoom your chart out, way out, as far as it'll go, and that is as far as this one will go here. If the move looked massive zoomed in but disappears into normal market noise when you zoom out, it's not a real expansion. But look at this one. This one here passes. Look at that. Big move to the downside. It looks obviously big. Yeah? Now you've got to ask yourself, does this look obviously big? If yes, then you're in. If you're unsure, then you're out. So you might look at this one, for example. You might go, that's a big move. And when you zoom out, well, do you know what? When you compare it to everything else, it isn't a big move. Whereas this one, it is a big move. You can see it. It's huge. It's visibly larger than anything previous. Okay, zoom your chart out and ask, does it look obviously big? If yes, you're in. If you're unsure, you're out. So both filters pass. So what do I do now? I get my Fibonacci tool and I draw a fib from the high, because it's a sell, down to the low. Okay, and the low at this point is now down here. Now you might say to yourself, what happens if I draw it to here? Price comes to here. Doesn't tag us in anywhere, carries on lower, so you just draw it lower. You draw it down to this level, still doesn't tag us in or do anything, so you draw it down to the next level, which is down here. Doesn't do anything, so you draw it down to level, which is down here. That's how you draw your fib. Now I've got to tell you before I move on the standard fib settings. I use 7. I use the -27. You can do this by right clicking here and going to settings. I use the -27, I use the 0, the 20, the 38.2, the 50, the 61.8 and the 100. There they all are. Set them in your C Trader and click the set as default. and then every time you draw a fib, it will look like mine. Okay, what I do then is I set 3 pending orders, and they're set at 38.2, at the 50, and at the 61.8. The stop loss for all 3 is 1 break above the 100% level, okay? And my TP is at the negative 27% level. Now, this is where most people get it wrong. They'll put one big position in at the 38.2 and hope it runs. But I split the position into thirds. Why do I do that? Because price doesn't always come back exactly to the 38.2. Sometimes it'll retrace further. It didn't in this example, but sometimes it does. Sometimes it doesn't make it to the 50. But by splitting the risk into 3 orders at different levels, I cover all possible retracement depths without committing too much to any one of them. The total risk on the trade across all 3 orders combined is usually 1% of my account. So if all 3 levels fill, that's 1% on the line. But if one fills, that's about 1/3%. So now we wait. From here on, there are exactly 2 scenarios, just 2. Once I know which one I'm in, the rules write themselves. So I've got scenario A. Let's say only the 38.2% fill. Price tags it. It fills my first order, and then it continues in the direction of the original expansion without filling the deeper levels. All right, 2 things happen here. First, my take profit stays at the negative 27 extension, the original target. Second, the moment price crosses back through the 20% level, moving in my favour, I drag my stop loss to break even. From that point, the trade can only win or break even. It just can't lose. And if we look at the chart here, we'll see that price came back to the 38.2 level. It crossed above the 20% level, and then it came down to the negative 27% level in this instance. Okay, and as soon as price traded above the 20%, which will have been at this point, we'll have moved our TP to break even, and then it came down and it hit our take profit level. Now, for scenario B, let's look at this on chart. This is a buy opportunity. We've got a big move up. We've taken out 1, 2, 3, 4, 5 levels, so that passes, and we zoom out and it's a big expansive move that's taken out a lot of levels, so it's good. So we draw our fib from the bottom to the top, and at this point price comes down. It takes our 38 and our 50, okay, it comes up a little bit, doesn't cross the 20, comes back down and takes the 61.8. so this is a scenario B. All 3 have filled. Now I've got 3 positions open. The rules change. I now move every take profit up to the 20% level, which is here. Okay? No break-even trigger this time. The stop stays at its original 1 brick beyond the 100%. Why the difference? When price retraces deeply through the 38.2, it's telling you the momentum has weakened. A conservative target, which is the 20%, gets you out at a high probability point. Chasing the original target from a deep entry too often turns winners into losers. Trust me on that one. I learnt it the expensive way. All right, so let me show you a real one here. So it came down, it took all 3 levels, and then it came up and it took our TP out at the 20% level. Can you see? Okay, the bit nobody else talks about, the losses, because they do happen, and pretending they don't is how you end up trading angry. Worst case on this strategy is all 3 orders fill, price doesn't bounce, and it runs all the way to your stop loss, 1 full % loss. Now that's the trade-off for the asymmetric upside. Sometimes you do take a full hit. So here's an example here. This one happened the other day. Okay, the setup looked fairly clean. Filters passed, all 3 orders filled on the retrace. Can you see? Price came down, almost tagged in the 20%, but then up it went and it stopped us out. Okay, so if we look back honestly and we zoom out, we can see it wasn't a massive expansion. There was an expansion down, then an uptrend, then a down, then up, then down. It wasn't completely clean. Price was ranging. It did take out 3 highs, but it'd have been nicer if it had taken out this high or even this high as well. That would have been really good, but it didn't. So we can look at it and we can say, well, we could probably have skipped that. Also, this trade was on a Friday, and nobody likes trading on a Friday. And if you don't know what I mean by that, you haven't been trading long enough. But that's it. The lesson here is you need to get stricter. Probably should have skipped that one. But that's the discipline of this. The strategy isn't broken when you lose, you broke a rule, or you took a borderline setup, or the market just did the thing it does sometimes. What you do is you log it, you learn what you can, and you take the next valid trade. So a quick rundown of what this looks like trading day to day. So I wake up 6:30 a.m. I open CTrader, gold chart is up. I check the economic calendar for red folder news. I note my account size and my risk for that day. 7 a.m. my window opens. I watch gold. I glance at my expansion scanner on a second monitor for setups on other instruments. When a setup appears, I apply both filters. If they pass, I draw the fib, place the orders, and I move on. Between 8 and 9 a.m, I'm managing any live trades per the rules. Scenario A or Scenario B, follow the script. 9 a.m, window closes. I stop hunting for new setups. I wait for any open trades to close out, then I walk away from the screen. On an evening, 5 minutes journaling every trade. Once a week on Sundays, half an hour reviewing the week. That's it, about 7 hours a week in total. Look, if you're going to trade Renko, trade it with rules. Whatever strategy you use, write the rules down. Journal every trade. Review weekly. That's the answer regardless of who you learn from. Even if you take nothing else from this video, that bit alone will change your year. Now, if you'd like to learn this specific strategy properly, the way I trade it every day, I run a 12-week mentorship that walks you through from foundations to live trading. You'll get 14 modules, a working trade journal, the DCA C-bot that places your orders, the indicator, and a Discord community with daily setups, weekly live sessions, and a route to actually getting a track record. Links are in the description. There's also a free Telegram where I post setups daily. There's no paywall, no upsell, just the daily setups. That link is also in the description as well. Even more useful, there's a free Renko setup checklist that I made. It's one page, covers everything from this video, plus a few extras. You can get it from renkogold.com/. Now, if this was useful, hit subscribe. I post one of these every couple of weeks. It's all in the same format, all rules-based, no hype. If you've got questions, drop them in the comments. I read every single one of them. And what else to say? I'll see you on the next video.